Which is the more difficult, buying a home in WA or obtaining finance? Welcome to episode 68, Property Avenue WA. I'm Tony Viner, commonly known as TV. He's Oscar D'Souza. This is where we just do quite a bit of focus on WA. So if you're buying a home, selling a property, could be all sorts of things that you're doing associated with property. You might have a deceased estate. You don't know which way to go and how to go about it. We sort of discuss all those different things, not all at once, but over different episodes. We try and get some experts in, not just ourselves. And it's all about, we review, we discuss, we exchange our own opinions, we answer various property questions, and with WA property in mind, of course. And we're sure we also, it's not all super serious. We sometimes have a bit of a giggle, we have a bit of a laugh, and we always enjoy that. But we just try to provide the odd tip and a bit of direction that could help you with your property journey. So tonight, I'm looking forward to tonight because we've got a guest. And our guest is one Dean Stonehouse. Dino's got a very extensive background in finance. In fact, he and I worked in the bank way back in the time. And now he's got his own finance broking business, a very successful business. He runs it on his own, and his business is very much a personal one. So looking forward to having him on. He does follow our show. He has been a guest in past episodes, but it has been a while, and we've been trying to get ourselves organised to get a guest. So we've got a few people that I have lined up in future. But if you've got questions, you can join us on our live chat line. And remember to, not only do we do a live stream, but tomorrow, although speaking to our producer, he may be getting the podcast uploaded tomorrow, so it might be a bit later than normal, but our podcast will be available this week via your normal podcast platforms, particularly iTunes and Spotify, I think are the main ones that I utilise. So you can certainly get our program, Property Avenue WA, via those. Oscar D'Souza, welcome. Great to see you.
Good evening, Tony Viner. Good evening, viewers and obviously listeners on the podcast. Great to be here as always, TV. And just like you, I'm also excited to have Dean back on the show and to listen to a lot of the stuff that's going on in the property finance world, because since we last had him on, I dare say things have changed quite a bit, but I don't know whether they've changed for the better in terms of timeframes have gotten quicker and the banks processing loans have gotten quicker, or has it in fact gotten worse? So what I do know though is that our market over here in WA, whether we're talking about the sales market or the rental market, but if we're talking finance, we're obviously talking the sales market. Our sales market is into the spring selling season. It's been so strong all year. In fact, it was strong ever since we came out of COVID, so the second half of last year. And I've got some stats as well that's going to let us know exactly how we're trekking into the spring selling season, and probably a bit of an indicator as to the way that the year's going to finish off. So we've got lots to get stuck into in WA property over the next 45 minutes. I can't wait to do it with you, TV.
Mate, before we do, I just digress a little bit. What a sensational couple of days weather-wise it's been, which obviously will impact on the farmers and their crops. Now people go, what the hell is that got to do with property? But it's got a big thing to do with property because it impacts on them and their farmers have a good season. They then come out into the marketplace as well, but also farmers, they farm on property and they farm on land, and it has an impact on their sales situation. So it'd be very interesting to see how things progress, because there was one particular area that really got whacked big time with frost. And people in the city don't necessarily recognise that, but it has a massive impact on the productivity of all this hard work they've put in. And then suddenly frost just wipes their crops out. So that's interesting. But also, it's a pretty exciting time here in WA, not just in property. What about the AFL Grand Final? How exciting is that?
Once in a lifetime. Yeah, I'm pretty certain we can say it's almost going to be once in a lifetime, TV, and it's great for Optus. It's great for WA. It just ticks lots of boxes. Of course, we feel for for the Victorians to lose the grand final, and obviously the reasons why. Obviously the COVID situation that they've got, and in fact the rest of the country. But did you catch the news tonight, just in terms of the protests of the construction industry through Melbourne, mate? That was that's not a pleasant watch at all.
I didn't see it. I've been a bit busy trying to prep for this show because I was a little bit disorganised, which is something new for me. And but I did read it up in the papers. So I can imagine.
Well, compared to what they would normally be doing in Victoria for grand final week, with the parade and people taking the week off and all the different things that happen over the course of the grand final week, this week alone will go down in history in Melbourne as being one of the worst grand final weeks, apart from just not having the grand final. Looking at the carnage, what's going on in terms of the protesting, the number of people. The footage that I saw on the news tonight was police cars fleeing the area with smashed windscreens and back windscreens, people kicking cars, bricking cars, dogs getting kicked. Honestly, it's about the worst that society can offer up, and a complete contrast to what grand final week in Melbourne normally looks like.
Yeah, sad. Very sad, but anyway, we've certainly got some excitement happening in WA, as I say, both not only in a sporting perspective, but certainly in a property perspective. Mate, I think we should, without further ado, because we do have a guest coming on in about 5-10 minutes. So I think without further ado, we should quickly revert to a very, very popular segment. Very popular. I get inundated people wanting to know about ODs. Over to you, my friend.
Let's jump straight into the sales market. So, as I said in the intro, TV, it just keeps powering along, and we had consistent sales through winter, which normally we'd expect it to drop off a bit, and now we're into that spring selling season, as I mentioned before. So, just in the last 7 days, there's been 911 sales through the Perth metro area. 911, which is I don't know if that's any sort of a coincidence, but obviously we've just had a 9/11. The 20-year anniversary, but it just so happens that there's been 911 sales in Perth as well, compared to the same week last year where there was 771. So the same week last year was really, really busy, and 911 sales in Perth is just massive. So I also caught up with a good friend of mine, Michael Keel, during the week, or rather on the weekend, and he said even bouncing into this selling season, that he's definitely noticed a kick from probably back from where things were really busy in April and May, and then it kind of leveled off a little bit as we approached winter. But certainly in the last couple of weeks with the weather and just the move into September, basically, he's absolutely noticed a kick, not in the number of properties that are coming on the market, but definitely the amount of buyers that are around, that competition, the lines outside home opens, and the buyer inquiry during the week. There's definitely been a spike in that. So, and just touching on listings, 8,537 listings available. So that's about as low as we've been any time in the last 18 months. That's simply not enough stock. This time last year, there was 10,684 listings available in WA. And so as at today, we've got 20% less listings than what we had this time last year. So,
really?
It's a bang on 20% a drop in listings, and that number is only likely to decline even further. So, just because there's that many buyers around. So the sales market doesn't look like there's no signs of it letting up whatsoever. If anything, I actually predict that it's just going to become a hotter market as we approach the end of the year. The rental market, 676 listings, 676 properties leased in Perth in the last 7 days. This time last year, it was 829. So we're down a bit in terms of the rental leasings, but that's not because the rental market is dying off, not one bit. It's simply there's just not enough stock out there. And as we touched on last week, one of the main reasons for that is a lot of those investors have been selling off their investment properties because they made losses over the last 4 or 5 years. The market's recovered a little bit and now they're just wanting to get out. So they're selling their investment properties. So many people that come to home opens that I've got for my rentals say they need to move because their current landlord is selling the property. So it's a very common story. And the listing side in terms of the rentals, this time last year, there was 3,028, and that was when we had a vacancy rate just over 1%. As at today, there's 2,279 rental properties available through WA, 2,279. That's almost 25% less than this time last year. It's 24.7% less than this time last year. Now, last year, rental crisis was all over the news, all over the media, and today we've got 25% less rentals available. It's a crisis. It absolutely is a crisis. The stories that you see on the news of people living in caravan parks and on other people's front lawns, it's a very, very real problem, TV, and absolutely no solution around the corner. There definitely isn't. And for our Gero friends, for those following what's going on in the Geraldton rental market, which we always touch on, if you're looking for a rental in Geraldton, there's 49 properties available in the whole of Geraldton as at today. So that is very, very low. It should be at least 3 times that in order to meet the level of demand that's there. But yeah, there's a great shortage of properties in Geraldton for rent as well. So that's the market summary. It's not all that different to, I guess, the other weeks. Only that, if anything, that the market in both the rental and the sales area is just getting more and more heated. And in both markets, there's not enough supply, but there's massive demand.
Mate, I'm actually had to come up to Geraldton this past week for appointments and whatever, and see my mum, of course. And I've actually had 2 experiences where people contacted me and they've been renting a property and they're now trying to work out whether they have the ability to buy a property because the property they're renting is being sold and they've got to move out. And as I explained to them, I went, how have you been trying to get a rental? They said, oh, yeah, but it's really hard. I said, yeah, it is hard because our statistics suggest that we do on our program, suggest there's only 48 properties. And those properties wouldn't be sitting there waiting for someone to knock on the door. They would probably have a list of applicants already lined up trying to get those properties. So technically, there's really nothing there.
Yeah, that's exactly right. I had a couple of properties down here in Perth on the weekend, which we've almost just finished processing applications. One in Woodvale, and we had 21 applications on the one in Woodvale, and one in Ellenbrook, and I had 24 applications on that. And the thing is, a lot of the applications, and by a lot I mean at least 50%, very good applications. You know, if you had less applications, you'd rent the house out to most of these people because they've got the right income, they've got a good rental history, they've got good rental references, all that sort of stuff. But obviously the house can only go to one applicant. So landlords just pretty much have to pick one, and many good applicants are simply not finding rental accommodation, not because there's a problem with their application or their affordability. There's simply not the stock out there.
Yep. And it's certainly, I'm certainly getting similar inquiries about people wanting to buy, and that's something we'll talk to our guest about, who I believe is just about ready to rock and roll. So I think we should introduce none other than Dean Stonehouse. Dino, welcome, mate. Good to see you again. Hi, and for those that aren't aware, and those obviously that are perhaps listening to the podcast and not watching the live stream, Dean's got his own finance broking business and looks after, he's a one-man band and looks after his clients. So there's very much a personal approach, the way he goes about things. And obviously he and I have a friendship that goes way back from our banking days. So, mate, great to have you on board. And I hope you did look after your mother last week with her birthday. She did get a mention on our notice board. So welcome.
Yep. Thank you. Yes, my mother is very sprightly 86 back on the 14th. So
beautiful.
Yep. Hanging in there, which is really good. Thank you.
And in good health too, I hope.
She's doing well. Yep.
Good. Good to hear.
Her and I have been chatting over war stories of health in the more recently. So, but yeah, she's doing fine. Thank you.
Yeah, mate. We great to have you on board. And you'll notice with our headline that we had this week, which is more difficult, buying a home or renting a home or obtaining finance. And certainly some of the questions that have come across my desk or on my phone of late suggest that it's a bit of a mixed bag, and some of the headlines. So I suppose from your perspective, what in the current market, what are you sort of seeing when it comes to the finance application? Because there's a fair bit of talk about finance in recent weeks.
Yeah, it's probably almost business as usual, to say it that way. Many of the banks still have a backlog of applications and processing. So particularly the majors are still working towards trying to improve their processes to get to an approval decision faster. Some are still 2 weeks, 3 weeks, 4 weeks out. So one of the things that's probably adding a bit of a complication to that is a number of banks have come out now giving cashbacks. So they're trying to entice. It's almost a bit of a competition to the lowest rate. It's not just the lowest rate, but all of a sudden you're seeing a lot of offers, 2,000, 3,000, specials for this, specials for that, purely to entice the client to move from one lender to another. So the queues are still long. The banks are still lenders are under a lot of pressure to make sure that they're picking up the right client and the client's not going to be any form of hardship. So that area hasn't changed, but a lot of the regionals have certainly improved and are still very much in the mix.
Mate, we've had this sort of question before, and I know I certainly still get the question with some are still, when it comes to the real estate fraternity, saying, oh no, the standard finance clause is 21 days. But as I've tried to point out, there is no standard at the moment. In fact, 21 days is, I think, too short a time frame. You can be lucky on occasions. What are you recommending with regard to, from your experience, what are you recommending with the time frame when it comes to a contract and finance clause?
It really comes down to where the client's going to borrow their money. So there are lenders out there that a 14-day finance clause would be sufficient. But the best thing would be for a potential purchaser is to actually look at getting their finance in order before they put the contract in. So at least you've won probably from a settlement side, fill in the contract correctly, addressing who their preferential lender is, but also means then we can have a really good solid understanding of knowing where that lender is currently in the market with processing applications. So I know it's critical that to put an offer in, you need to make sure your contract looks the sharpest to be the winning bid. No different to presenting an application and make sure your application, as Oscar was just mentioning about a rental, making sure your application is the best. And the shorter the time frame from finance would be one of those factors of a seller making a decision of who do they take an offer from. So that's where I find it is. It's really been working in conjunction with your real estate agent, in conjunction with your settlement agent, but also understanding who your lender is and trying to get that finance clause just right, that it doesn't become a negative when you put your application up or put your offer up.
Yeah. So what you're saying is that is 21 days sort of a fine line?
It's for some lenders, if you choose a couple of particular lenders, 21 days wouldn't be sufficient. So what I'm actually saying is you need to tailor your contract and you need to tailor that clause to match where you're going to apply your finance.
Yeah. So in other words, really they they should be, if you're a buyer, sorry to interrupt, but if you're a buyer, you really need to liaise with someone like yourself, your finance broker, and or your bank to clarify the situation before you sort of put pen to paper on the contract.
Yeah, that'd be my suggestion, my recommendations. And even if you're going direct to a lender, asking the lender within the organisation who you're dealing with, what is their time frame from actually looking to assess an application? Because it can vary so widely at the moment. You can get applications through some lenders and they're picked up in 24 and 48 hours, but some lenders are not picking up applications for 17 to 20 days. And that's not to get your finance approved, that's initially to pick it up and have the first to look at it. So there are some there you'd actually do you want a 30-day clause. And it's the same with settlement. It's actually also looking at what is a reasonable settlement time once you've got your finance in place, because that becomes the next catalyst behind the scene.
And I keep on emphasising that's not the settlement agent's doing, that's the requirement of the lender that we're talking about. It's not, because I've had that question put to me via my staff, and I'm going, no. That's what the lender requires, not what we're doing. That's what the lender requires to get their position organised and get themselves in a position to proceed to settlement. Yeah,
and you probably, obviously, there's agreements of what's minimum requirements for PEXA, but obviously, getting all the in line. One thing that was still an issue, and I know it's being pushed by many bodies representing, whether it's the real estate insurers, bankers, whether it's for mortgage brokers, etc., is the requirement in Western Australia, and I might be wrong, but I'm pretty sure we may be the only state left in Australia that requires you to use a wet signature and print out a mortgage document, where just about every other state, if not all of them, now will let you sign your mortgage electronically through like DocuSign.
Right. OD, I know you were dying to ask something. We've taken over.
Dino, great to have you back, mate. Question for you. Just going back to the title, I guess, or the show about, is it easier to rent or is it easier to buy? Just for the layman renter who, let's just say that they have a deposit available, they've saved up a suitable deposit for a place. If you're looking at current interest rates and what a mortgage repayment's going to be, and then you're looking at the current rental market and what someone's paying in rent, for a finance broker or for a lender, to what extent does a good rental history and the proof that you've been able to pay $450 a week, as an example, in rent over a 12-month period, to what extent does that actually impact your finance application and proof of serviceability for a mortgage?
It's a very, very big component, and particularly if your deposit is not a 20%. So you may be a first home buyer who's managed to save 5% deposit. There is ability to use your last 3 to 6 months rental history towards confirming your ability towards what we call genuine savings. So there's a number of different lending criteria. So a lender will look at that and go, yep, you've been paying $450 a week and you've been paying it for months and you pay it on time. You probably see quite often, even from your role, how often maybe you would get a renter come and ask you for a copy of their rental history. And that's more than likely what it's for, because they're heading off to their bank. And it becomes... So what a lender's then doing is looking at it and going, okay, great, you're paying $450 a week. And they may say, well, look, your mortgage repayment is also only going to be close to $2,000 a month.
Yeah.
But that's on current rates. So what the lender would then do, and what the person who's assessing your application will wish to do, is look at going, okay, on top of that, you're now going to be paying rates and taxes. You don't currently have rates and taxes obligations. So there may be another, depending on the type of property, there may be another $4,000 or $5,000 worth a year worth of expenses to you to keep that property. And then they'll assess it not on the rates. You can pick up owner-occupied rates. I'm not going to quote examples too often, but there's 2% interest rates, for example, to get an owner-occupied home loan rate. But they're going to assess it as if in the rates are increasing, or what the long-term or the medium-term average. So most lenders will be assessing interest rates somewhere around 5 to 6%, and your ability to repay. So if they're assessing your interest rates like that, or anywhere in between, they're going to go, well, you're paying $450 a week in rent. Are you saving, or can you exhibit to show me that you've been saving the difference between what you then need to do if you took that mortgage on board? In other words, do you have capacity to pay an extra $400 or $500 a month so you can pay all the additional costs to maintain the property? So it is critically important for someone first getting into their home to actually understand the implications on their cash flow, understand what spending behaviours may need to be changed or adopted to give them the best chance to get their application approved.
Yeah, no, that's a really good answer, Dean. And you kind of segued into probably the second part of my question. And that basically was, banks obviously factoring in the likelihood that interest rates will rise over the next 5 years. And therefore, what's that going to do to impact your serviceability? So my question, I guess, on that is that something, a new method that lenders have been using as an assessment tool over the last few years whilst interest rates have been so low, and we are pretty confident at some point that they're going to go up? I mean, is that something that they used to do 7 or 8 years ago when interest rates were 5 or 6% and it wasn't really likely that they're going to go up? If anything, they might come down. Is it something just because of the likelihood that interest rates will go up over the next 5 years that they brought in this new sensitivity analysis almost to work out what will happen to your serviceability in the event that the rates do go up?
I wouldn't say it's something new. It's certainly been there for many years. However, they've tweaked the way the calculation's done. So if you do go back 5 to 7 odd years, most lenders would have more than likely picked up what your current rate is. Otherwise, the rate at the time, it could have been you might be paying 6%, and they'd normally add a buffer on, and that buffer potentially could have been 2 to 2.5% above. But obviously, as interest rates have fallen, and initially they fell to historical lows, which was like the 6% rate, and then we just continued to fall further, there has been certainly pressure applied to banks and lenders to look at what is more than basically a 2% buffer. If you're at 2%, that would be at 4%, where most lenders are now applying usually around a 5.5%. There are some lenders actually still applying an interest rate calculation at 6%. It is quite high. But then at the same time, the other thing that's changed in the last number of years, which keeps coming towards and the discussion topics is more around living expenses and how no two people are the same. And even though previously you could go, sure, there's a family of 2 adults and 2 children earning an average salary in Australia, for example, of $75,000 each. This is what your living expenses will be. Well, now it's no. You now basically go through and actually analyse how somebody is living, and we know the more they earn, the more they spend, and no two people are the same, and that's another ability that can impact your borrowing cost. Yeah,
right.
Actually, it's interesting you say that, Dino, because there was an article which I was trying to find, which it made reference to the fact of what they called liar applications and the percentage of people who had not really covered, they either didn't get their income right, which I found a little bit intriguing, that with the processes that are required with the loan application and the supporting evidence of that information, that they were suggesting the percentage of people that were basically cheating with their income, and more particularly their expenses and their living expenses. And I'll see if I can't find that article before the night's out. I thought I saved it, but I can't find it. Did you see that?
Yeah, I do. And I know the article you're referring to. And it's been raised in a different discussion group that I've been a part of. And some of it's a bit negative against lenders and a bit negative also against mortgage brokers. But it's also when you actually look at it, you actually need to have a look at the questions. And one of the questions that I remember, which is grouped together, is has the amount that you've disclosed in your application form, is it correct, or have you been asked to vary it by the lender or the mortgage broker? And it's grouped into one. So does it mean it's wrong? Well, it might actually reflect higher, and quite often you might actually be somebody who actually lives very, very carefully, you might actually be growing your vegetables out the back, and your living expenses may be historically very low and low compared to the norm, where you wouldn't be surprised your lender will say to you, look, let's put a buffer in, let's build it up, let's be conservative, let's show your living expenses as being higher. Let's actually see, does it stress it out? Well, that will get grouped at the same time as somebody actually putting the wrong information on their application form.
Right.
When it's technically, so there's two sides to the argument when you actually read the article, when you actually read the questions, and it's probably I'm still a bit surprised. It would be extremely hard in the current market and what happens in an assessment to provide misleading and wrong information. And if you did on the application, it would be picked up in the assessment, particularly if on income. Well, you need to provide pay slips or you need to provide tax returns. If you've got pay slips, quite often they're being validated and verified to your bank statements. Does the pay go in every fortnight? Does the amount match? Does the company that you've given me the pay slip actually have an ABN? Does that company exist? So there's a lot of checks for fraud being done during the process. And it's exactly the same with your liabilities, where people were going, oh, I've got credit cards, but I don't use them, so I didn't include them in the application. Well, most lenders are now what we call apologies, I lost my train of thought, in their
Oscar
credit reporting.
That's okay, mate. Oscar does that all the time. That's
Oh,
not an issue.
it happens to
That's
people
common.
under 50 when they're over as well. So yeah, there's comprehensive credit reporting, and in comprehensive credit reporting, when somebody picks up your credit report, predominantly all your loans that you have and credit cards in Australia are already being reported and recorded every month if you made your repayment. So if you miss something, quite often it comes back and said, sorry, we've identified some undisclosed credit cards, you need to pick them up. So it's pretty difficult in the current way of things are assessed to actually, you might put your application with the wrong information in, but 99% of the time it's getting picked up.
Yeah. Yeah.
TV, I was just wondering, just in terms of our topic and content tonight, maybe a disclaimer, perhaps.
Oh, that's a good idea. What a good idea. The general advice disclaimer. I will let you know what that is, and that's the information on this podcast is regarded as general advice. Remember, we have a podcast. So we've got to do this verbally as well as what's on the screen. And your personal objectives, needs, and financial circumstances are not taken into account when preparing this content. We always advise and recommend you seek personal, professional, and financial advice tailored to your specific individual needs before making financial, property, and investment decisions. And exactly why our guest, Dean Stonehouse from Stonehouse Finance, he's got that total independence, he's got that professional background, got a lot of experience, and hence we got Dino on board. But I know from clients that have utilised his services, he comes highly regarded, and hence why we've got him on board to have a chat and discuss a few things, mate. One of the articles, the headlines that we had of our episode this week is that is it more difficult to buy, or is it more difficult to borrow money? The reason why I did that is because I've had several people in recent weeks who have come to me and are sort of a little bit frustrated because, well, in fact, one case didn't even come to me. There was I actually played my first round of golf for some 5 months a couple of days ago, and one of the young guys that I was playing with made comment. He said, "TV, it's doing my head in. I'm looking at trying to buy, but they just, every time we look at anything, it seems to go really quickly." And I said, "Well, one of the things you probably do first is, do you know how much you can spend? In other words, and of course he asked the question, what did I mean by that? And I said, well, have you gone to your banker or have you gone to a finance broker and discussed what you can afford? Well, how much can you borrow? And of course he had not done that. And I said, well, that will help your cause for starters, I would have thought. Dino, I'll probably go to you first and ask Oscar as well. But what are your thoughts with that? That would be a logical process?
Yeah, agreed. I totally agree. And it's probably more from a real estate viewpoint, is they're selling a property representing the seller. the seller wants to know that the person they take the offer from and accept can actually conclude that settlement without hassle and on time. So they want to make sure that if you're borrowing money or you've got access to money, they want to make sure that you're their best candidate. They don't want to take their property off the market or delay it with too many ifs and buts. So yeah, it makes logical sense that if you want to be the best offer, and the best offer is not always just money, but the best offer is the cleanest offer, and that's probably Oscar's probably more the better person to answer that question. Get your finance up, know up front what you can afford to do, and understand what your limits are and understand what the implications are. Because yeah, quite often it is an emotional buying. You've seen it so often in auctions, and people know that they're going to pay X dollars and they just keep bidding, and then yeah, I've seen some really shocking stories where in those circumstances somebody says, yeah, you can afford to borrow and you can buy a property up to 500,000, and they come back on a Monday, yep, bought a property and it's 530, 540, and you go, yeah, I just told you could only buy what your limit is, and then you got to try and pull a rabbit out of a hat. It's almost not, yeah, it's not good, not pretty.
OD, with regard to the real estate side, and you're talking to the real estate fraternity probably just as much as I am, but yeah, is that what you're finding? Is that some of the discussion you're having with
Absolutely.
regard to how difficult it is to buy? And I don't think we've even touched the surface yet, really, have we?
No, look, I think just going back to your original question of Dean and whether it's advisable or whether it's a logical thing to get your finance position in order, I think particularly in this market, it's essential. Like you absolutely have to do it, because you have to do it for your own benefit first and foremost, but then even to get a look in at the property, because these days real estate agents are qualifying their buyers a whole lot more than what they ever used to do. Previously, they were so much more focused on the price of the property and maybe some of the terms of the offer, that when it came to finance, it was okay, well, yeah, have you who are you going to be going through and who should I write down here in the finance clause? But these days the conditioning of the buyers and the qualification of the buyers by the real estate agents is so much more, because like Dean said, they're acting in the best interest of the seller, and they need to be able to provide some comfort to the seller that the buyer is going to be able to complete the transaction. So if a buyer is honest with a real estate agent and says, no, look, I haven't even spoken to a bank or spoken to a broker, the real estate agent isn't going to be batting very hard for any offer that you put in, and especially not in this market.
So really what you're saying is it's imperative that if you're going to go out and buy, you need to be prepared. Is that right?
100%, not even 99%, but like 100%, you have to be.
Yep. And so when we say how difficult it is to buy, and as I said, I've had several people. Have you had that sort of feedback from people, you guys? Have you had that similar sort of situation where people are saying, gee, I've gone out to buy a property and I'm just not in the bull's roar? Is that because they're trying to be cheeky with, discounting the asking price?
Not from my experience, not from what I've seen. I think that, there's whether it's on the rental side, and as I mentioned before, we've got really good rental applications, but the rental property can only go to one party. And similarly, you'll have people that are qualified for their finance and they're done everything that Dean is telling them in terms of making sure that they understand their limits and what sort of money they can afford and will get approved for. And so they've done everything right there, but there's just not enough properties for sale, and there's many buyers for them. So a really good buyer that's done all the things right finance-wise can continue to miss out on property time after time through no fault of their own. That's just the nature of the market at the moment.
Dino?
Yeah, same. I've actually do a bit of work with a buyer's agent, and the buyer's agent, if he talks to anybody and they go, hey, yeah, I want to buy a property, and that could be in the East Coast or that could be local, I want to buy another property, the first question is, have you got your finance in order? If the answer is no, I haven't got my finance in order, he goes, I'm not even going to take you shopping. I'm not even going to start looking for you, because I can't back, and I can't bat for you when I take your application and take your offer to show and say you're the best candidate, because he's obviously got to face off with another real estate agent to go, my client's your best client, this is what we can do, and he wants to know, have you got the ability to borrow? And so no surprises, that's what they're trying to do. The last thing they want to do is put it, no one wants to go and do all the work, and 14 days later or 21 days later they don't get the finance they need, and you start coming back with your hat in your hand going, I need a finance extension, all of a sudden, or you're lodging another application. It just, it gets sour very quick.
Dino, with what's going on with, the lot of talk, and the Reserve Bank have been quite adamant about they're not going to move interest rates at this point in time. And obviously with what's happening on the East Coast, that's perhaps having an impact on that decision as well. But then there has been talk to say, well, they need to sort of attend to the regulators need to attend to that with regard to the banks. Do you see that becoming even more stringent when it comes to a loan application? Is that going to be the case, if it's not already?
There's probably a couple of different aspects to your question. Firstly, the Reserve Bank, as you probably realise, have the ability to impact and influence banks regards to the decisions on pricing, but you've seen banks just go out on a whim and do what they want to do and go, I want to change my rate. Particularly if you have a look at the moment, Reserve Bank's going, hey, we don't want to move the official cash rate. But if you have a look at 3, 4 and 5 year fixed rates in the home loan market, they've already moved. They've been moving for 6 months. You used to be able to go and get a 4 year, 180, 190, 1.9, 199, 4 year owner occupied rate, and all of a sudden you'll only now get that on 2 years, or you might get slightly better on 2 years. So the longer term rates have already pushed out. So that's a particular concern. The capacity, what will probably happen is, now more likely in Sydney and Melbourne, if prices continue to skyrocket, well, housing affordability becomes the question, and that will also become a pressure point for people who will not be able to afford to borrow the money to buy the house. So that may impact to slow that market down if the Reserve Bank doesn't do anything, or the APRA going back to banks. So there's a number of things in play. There's been restrictions put in place regards more to debt to income ratio. So lenders are having to look at how much you're borrowing as a total debt in relation to the percentage of your income. And there's certainly ratios put in place for that, which weren't there a number of years ago, and they do get tweaked. So that's another way that the lender can be influenced to not lend the same amount of money into a certain sector. So that's the bit I'm finding. Obviously, housing affordability in WA is still pretty good. Be interesting. Yeah, rates potentially will move without the Reserve Bank is my view, but obviously, yeah, that's not advice.
Mate, I've got a lot of questions, but it's just been an absolute pleasure having you on board, and I'm just looking at the clock and going, well, that's going quickly. But one of the questions that I wanted to check on, there's been a couple of articles, and I'm hoping to have a friend of mine, Mortgage Mates, who just only today, Daisy from Mortgage Mates, has just released her new website today. But the focus is on being able to buy a property with a friend. When it comes, and I noticed there's been a couple of articles in the Australian about people buying, couldn't afford to buy on their own, so they teamed up with a mate and bought a property. That's probably more the case in the East Coast because of the cost to buy a property. Here in WA, is that the sort of thing? Have you experienced that situation here, and how much more difficult is that finance wise?
I do come across these. I don't get a lot of them. These are probably not finance questions. Whether you're saying, are you asking me, is it a good idea or not a good idea?
No. I'm not asking if it's a good idea. I'm asking more the fact of how does that make it any more complicated with the finance process?
It does slightly. So first thing is the two people borrowing money and they may not be in a relationship. So we're going to say, look, they're two mates. It's probably the best example to do it, or just two people want to buy a common property, they need to understand the implications. So it does come back to some legal aspects. In most circumstances, you're borrowing money. Let's say, Tony, you're buying a house with me. We decide I think it's a great idea. You need to understand a little bit about who you're getting into partnership with. You need to understand a little bit about their finances. You want to make sure their job's stable. You want to make sure what their income's like, what their savings capacity is like. The reason being is when you go to a bank, you need to realise that in almost all circumstances, when you apply for a loan, even if you have, hey, look, here's your debt, here's my debt, and it's got a mortgage over the same property, it's a joint and several liability.
Yep.
And people need to understand that is all of a sudden, if, for example, I'm not paying my loan repayments, Tony, what's your ability to pay mine and yours? Because the bank, if I don't pay my loan repayments, they could go and foreclose the total property, which would impact on you.
Yep.
So there's a whole lot of implications like that. And more than likely then from a legal aspect, you also got quite often, because we're not married, we'll be buying a property as tenants in common. And people need to understand what that means and what the risks are as a tenants in common. And talk about just those. You could do a whole show just on the tenants in common, and the aspects basically means, well, I can get up, I'm entitled to the whole of the property to basically to live in, and you could be the other tenant in common, but I can go and sell my share. I can sell my part of the property and not even talk to you about it. And all of a sudden you're a joint owner with somebody you don't even know. So the aspects from a legal viewpoint is, firstly, I want to address is in you really need to have some sort of financial agreement in place and an understanding separate to what you're doing. You really do need to go and follow that through and work out, well, then what happens if one wants to get out because all of a sudden they're going to get married and they're in a relationship. From a financial aspect, it can impact your future potential to borrow money. So if you're in tenants in common with a joint with a friend in a property, and then you want to go and, hey, you're now ready to get married and go and buy your own matrimonial home with your new spouse, it could impact your ability to borrow money because most lenders will pick up the total debt on your current property, including your other 50% of your friend or whatever the portion happens to be. And have you got the ability to pay 100% of that debt? Some lenders will look at doing what we call as a common debt reducer. So in other words, they'll only pick up your portion, but there's not many lenders that do it. So financially, it can impact what your ability to do in the future. If someone's thinking seriously about it, it's go get some legal advice and make sure you're on the same page, because it's not the ability of how you get into it, it's how you get out of it. What do you do when your circumstances change? And that's and that does impact your finance.
Yep, and we do intend to get a. I've spoken to a friend of mine. He's been on some over 12 months ago now, but with legal background with a range of questions, and that's certainly something we'll discuss. And we've got a few guests, and I'm certainly only a week or two ago spoke to Daisy from Mortgage Mates, and looking forward to having her on as well. So, because I know there's a number of things that she's got in place to cover some of the things that you've already identified. So, but separate to what Mortgage Mates is about, I have just picked up on this situation on a couple of occasions where people have come to me and put contracts together on a private basis where they bought together, and they're not necessarily in a relationship. They just happen to be a couple of friends that bought a property jointly, and it does put a different perspective on things as you just identified. Have you seen much of that, Oscar? Have you experienced that much yourself?
No, not really. And these days, TV, I'm mostly in the rental game as well. So I've come across it, but someone like Dean would have seen it a whole lot more than what I have. But you know what I was thinking, TV?
What were you thinking?
That shirt really looks good on you, mate. That shirt that you're wearing.
Oh, thank you very much. That's going to work well on the podcast when people say, "What shirt?" We'll have to get ourselves organised and do a little bit of Instagramming. I think we've got to get organised.
I think it's the colour. I think it's the colour against your skin. Yeah, it looks good.
Oh, look, you're just
you think, Dean?
Yeah. I think particularly with his suntan from playing golf last week. So.
Oh, please. Oh, Blake plays golf once. Do you want to tell? I'll tell you a story. Now, I got these brand new. I haven't had new hybrids, and my driver, the hybrids my son's bought me for my 50th. Now, that's some 16 years ago, so I thought I'd better upgrade. And I did that about in May. And I got these clubs from the pro shop here in Geraldton, from Daniel Bennett. And those clubs have been sitting in the garage, all shiny and looking very, very nice for some 4 months, because I had an accident, and of course, and haven't been able to play golf. And I thought, well, I'll go out before I play in the morning, do my exercises. And that's one of the beauties of Geraldton. And I then thought I'd have a little swing and just at least see if I can get a little bit of something happening with the golf ball and the golf club. Well, I'll let you into a secret. My first hit for the day, I lined it up and was very comfortable over the ball, and it went all of about 5 meters. So there's a go. It wasn't pretty. Yeah, there you go.
I bet you weren't wearing that shirt.
No, I wasn't wearing that shirt. No. Anyway, that's pretty boring. But there's some people that can't play golf, which isn't that a classic situation over there in Melbourne? They can walk around the golf course and do their exercise, but they're not allowed to play golf. I'm a little bit confused with some of these rules and regulations. I'm very confused. Listen, Dino. Sorry?
Lucky you don't live in Melbourne.
Yeah, exactly. Very quickly, and I know we've already run out of time, but very, very quickly, is it a good time to review your finance if you haven't already looked at what you're doing, and looking at your finances and reviewing whether you need to refinance? Maybe you haven't done anything about it for the last 10 years. Is it now the opportunity to do it?
Well, it is the opportunity now. You should really be reviewing your finances, if not every 12, every 2 years. So it's a bit like your car insurance, isn't it? The prices can change. And what you usually find is it's a bit like bracket creep. With your tax, it slowly goes up and you end up in a different price. So you might have had a great interest rate 2 years ago. It may not be a great interest rate today. And also your circumstances change. You might actually wish to now consider thinking, going, well, yeah, I actually do want to put a portion of my debt on a fixed rate. What does that look like? How does that impact me? So, yeah, no, I always suggest you should be at least talking to your lender or your broker if no more than every 2 years. Should even be earlier, purely just so you know where your rates are. And even if it's after 12 to 18 months, going back to make sure your existing lender, is there any way you can tweak it? Quite often you go and have a look at the rates online for your lender, and they're offering new customers a rate equal to or better than what you currently got. So that's the problem. The back book of a loan book, quite often for a lender, doesn't get repriced the same.
Yep. Mate, I know you've got to go, and we really, really appreciate. We've pinched a little bit of extra time off you than we planned, but we really, really appreciate the opportunity. And I'm sure there's more questions I've got and others have got to ask you, but I'll be kind to you this time. So we
Thank you.
way. Then
my voice from my drugs.
As you
know, I've been on medication. I've been on for a while. It's feel like my throat's starting to get a bit croaky as well.
All good, but we certainly appreciate the opportunity of you coming on board, and we'll do it again, because there's always lots of discussion and lots of talk when it comes to finance. So, mate, absolute pleasure having you. And are you supporting anybody in particular in the grand final this weekend?
Oh, interesting. I probably got a soft spot for the Demons. So
yeah.
It'd be nice for them to get up, and I think it'd be good for football if they can pick up a premiership. So, look, long as it's a great day, it's good for WA. But yeah, I really hope Melbourne can get up and have their 5 minutes of fame.
I did go to the Cats Demons game, sadly, and my grandsons changed their tune about halfway through the second quarter and started barracking for the D's. But I was staggered the number of people that were there at don't forget it's a neutral ground, but the number of red and blue there and people supporting the Demons was that was the preliminary final. So I would suggest it's probably going to be a bit the same this time round too, I'm guessing.
I just hope it's really good, really close game. The Bulldogs are playing like they did in 2016 as they led up to the finals, and you just don't know what they're going to pull out. So
yep.
I think it'll be a great day. It's close. That's what I really do hope it's a close game. I don't want to one side after the last few weeks.
Mate, thanks again. I really appreciate it. I'll be in touch, and we'll certainly when I get back to Perth, we'll catch up anyway, whether it be a cold beer or a cup of coffee.
Yeah, more like a coffee. Sorry.
Thanks a million, mate.
Thanks,
Yeah,
guys.
take care. Cheers, mate.
Bye-bye.
See you. Hey, how good was that? That
Awesome,
covered a
mate.
few that was really
He's just a book of information, that guy.
Yeah, very, very helpful. Very, very. And if anybody's got any other questions for down the track, by all means, send them through, and we'll ensure we get them through to Dino, and I'm sure he'll respond. So, and we'll certainly ensure because he's had a few little health struggles, so it's good to get him on board and have an opportunity to have a chat. Hey, listen, I know this is probably not the thing that you get that excited about, but I must, our segment. Let's go. Yep. What's on the notice board? This is Oscar's favorite little segment. I think we should have Dino for this, really, but anyway, he had to go. Never mind. Hey, listen, what's on the notice board, as we've all spoken about this week in Perth, grand final week, and there's so much activity going on, and I heard that they are opening up the gates. You've got to get a ticket, I think, but it's a free ticket to go and watch the players train. So
on Friday.
Is that Friday, is it?
Friday, yeah. And it's a free event, but you do have to get a ticket.
Yeah, righto. Okay. And then, of course, the Brownlow was on Sunday night, and that was I thought the Bont was going to do it, and then Ollie Wines came over the top and bingo. So they did something there. But today is World Alzheimer's Day. And it means a lot to me because my dear old mum, who's still about, she's got that horrible disease, had for some 15 odd years. And so it was quite ironical that today, when I looked up to see what was on the notice board, it's World Alzheimer's Day. So for all those people that are going through those challenges, be it family members, I totally understand. And hopefully one day, like a lot of other things, we find a way of getting. I think, did I read something the other day where they can find something now where you can they can find out whether I just got a message from my little princess to say the tickets for going to watch the players train, they've all gone. They've already snapped up.
I think there was 25,000 available.
Well, 25,000 gone. No hope. Unbelievable. So it's a big week. The other thing being is,
I wonder if Jude liked that shirt on you.
I think she does. You're an idiot. Mark Rossiter and the Sprock and Stevie Bluey Muir, the twins, as I call them, it's their birthday today. A couple of mates of mine from the golfing fraternity, used to be financial planners up in Geraldton. Now, I think Bluey's in Mandurah and Sprocky's in Perth somewhere. But they've got the Sprocks is associated with the Jurien Bay Hotel, which is very, very popular by the locals and the tourists. So to those boys, happy birthday. And another friend of mine on the golfing circuit, one Steve Bevan, happy birthday, Steve-O. And also this weekend, which is the start of the Royal Show. The Perth Royal Show starts this weekend. So your kids have probably already tapped you on the shoulder and went, hey, Dad. So that's from the 25th of September, which is this weekend, to the 2nd of October. And then tomorrow, this will intrigue you, tomorrow is World Car Free Day.
Oh, really?
Yep. So I expect you to be walking around with a banner on your back because you won't be able to have that dedicated property management car. You'll be walking around with your shirt because you'll be... It's
World Car Free Day?
Yes. Yep.
So I can walk up to Toyota tomorrow and say, today's World Car Free Day. And
no, not a free car day.
I'll have that new Prado.
No. It's not a World Free Car Day. It's a World Car Free Day. There's a difference.
I'll have that car for free.
You idiot. Anyway, there you go. That's what. So the idea of what's on the notice board, for those that may be thinking, what are these two on? The purpose of that is anything funny, silly, quirky, offbeat themes. You may have the kids' fete. You may have the kids' gymnastics event. You may have a business that you want to promote something about whatever you're doing. Or you got your friend's birthday that you want to just stick it up, and then you're more than welcome to send us a note, and we'll ensure that we've got it on what's on the notice board. So there you go. We've had some quirky ones, but this week probably wasn't as quirky as we've had on other days. But anyway, there you go. That's what's going on. Hey, What was the other thing I was going to say? Other than that, there was that. And then we got time for, we probably don't have time for it, do we? Haven't got time for the headlines. We'll pass on the headlines this week.
Yeah, so we've just ticked over 1 hour, mate.
I know. But I think we've always got time. We've always got time for the if question.
Yeah, I think so.
Dearie me, the if question. It's not a great deal of science gone into the if question this week. I really have been a busy little bee. But considering it's AFL Grand Final week, if you were playing the game this weekend, if you're in one of the teams, how do you reckon you'd go about things the night before?
Oh, that's a great if question. What would I do the night before?
How would you go about it? How would you prepare? What do you reckon you'd be doing if you were playing in the grand final? How do you reckon you'd approach it? Have you played in the grand finals in the past in your day?
Yeah, I have. Sporting wise, in rugby, in soccer, and in hockey as well.
And won? Have you won any?
Yep. Rugby. Yeah, rugby quite a bit, hockey quite a bit. No, don't know if I've ever won no, I have. I have won a grand final in soccer as well, back in the day.
Yep. So, okay, answer my if question. How would you go about things? How would you go about things the night before? How do you reckon you'd be preparing?
Well, how I'd go about it now is far different how I actually did go about it back in the day. And now I'm hopefully a bit smarter and a bit more wisdom. And I would do anything I could to take my mind off what is actually happening the next day. So that might be engross myself in a kids movie with the kids, or go and play Scrabble, or read a book, or do something, but not think about the game that is the next day, so I can be as relaxed. I can have as a relaxed sleep and rest as possible, and be at my best for game day.
And if you were a commentator, would you be doing the same thing? Would you approach it the same way?
No.
Right.
No. If I was a commentator, I'd be making sure that I'd be studying the players, basically.
Yep.
What about you?
Oh, well, I probably said one of the weaknesses I had in my earlier days, not so much when I was a teenager. Well, yeah, when I was a teenager and got a bit older, I played in a few basketball and hockey finals in particular, is ensuring that, and you even hear now, they still say that now, is not playing the game in advance. And, and I know I've done it, and sometimes you can't help it. You're lying in bed there and you're already going through the game, and then you get to the ground and you're just so damn nervous that you just about can't lift your feet off the ground. So, it's certainly, I've done that once or twice before, not deliberately, but it's just, you get so hyped up. I think the difficulty with this is at this level is the amount of talk and the publicity. You hear it all the time. And it was interesting to note that they made a comment. The fact is that it may benefit, because Melbourne's only got, I think, one player in total that's played in a grand final before compared to the Bulldogs. But it might be to their advantage because there's no parade and all those other things that distract them on the day. So maybe they can stick to some normality, although I think the captain of Demons, in fact, the captain of both sides, both have got a very, from the outside, they have a very relaxed attitude, and that might help the rest of the players. But, I'd probably be like you. I'd probably ensure that I was doing things as normal as I could be and making sure that I was tickety-boo, had a good night's sleep, and I was ready to rock and roll. Yep. Yeah. Mate, been an absolute pleasure doing it once again. I really do look forward to, although it did come around a bit quick. But to all those people out there, whether you're listening on our podcast this week or you've joined us in the live stream, thank you so much. Please subscribe, whatever it may be. Let other people know. We've got to try and do some homework and do a little bit of marketing. It's not a money-making exercise, but we just love doing what we're doing. Thanks again. For those who are going to the footy, enjoy it. For those, if your team's in the grand final, enjoy that too. Hope you have a win. And we just look forward to seeing you again next week and talking WA property. Mate,
And
thanks
have a good long weekend in WA.
Is it a long weekend?
Sure is, mate.
Oh, is it really? Oh, my God. Okay.
100%.
Have a good weekend. Have a great weekend. Take care. Unbelievable. Long weekend. Great stuff. Thank you very much, sir.
Thank you, mate.